March 2019, the pediatric ward of a public hospital in a small West African nation ran out of basic antibiotics for 11 consecutive weeks. 3 children died from infections that, under normal circumstances, would have been treated in an afternoon. The National Health Ministry's budget for that year had allocated the equivalent of $41 million for essential medicine procurement. When auditors finally traced where that money had actually gone, 18 months later, they found it sitting in a numbered account in a small, exclusive private bank that most of the world had never heard of. A bank called Hallowmere. The money hadn't been stolen in any dramatic sense. There was no heist, no hacking, no masked men. It had simply been wired, in careful increments, by the country's own Minister of Health into an account that Hallowmere had helped him set up specifically so that no one, not auditors, not journalists, not his own government, would ever be able to trace it back to him. This is case file number 004, Hallowmere Private Bank, the institution that didn't just fail to stop dirty money, it was built to hold it. To understand what Hallowmere actually was, you need to understand something important. This is not, at its core, a story about a good business that went wrong. This is a story about a business that was never good to begin with. It only ever looked that way. Hallowmere was founded in 1994 in a small, discreet office in the Swiss canton of Ticino by a former corporate lawyer named Julian Vantry. Vantry had spent the previous 11 years structuring offshore holding companies for wealthy European families. Legal at the time, though increasingly scrutinized. He saw an opportunity that most traditional Swiss banks, under mounting pressure from regulators in the 1990s, were beginning to close. A market for absolute, unquestioning financial discretion for clients whose wealth came from places that could not survive close inspection. Vantry did not advertise this openly, of course. Publicly, Hallowmere presented itself the way every private bank presents itself, as a boutique institution offering bespoke wealth stewardship to an exclusive clientele, emphasizing privacy, personal relationships, generational trust. The brochure language was almost identical to every legitimate private bank in Geneva or Zurich. That similarity was not an accident. It was the entire design. What made Hallowmere different was internal, not external. From its earliest years, Vantry built the bank's onboarding and compliance procedures around a single, quietly devastating principle, later described in an internal training document, obtained during litigation as the inverse scrutiny model. The larger and more geographically unusual a prospective client's wealth, the less rigorously their source of funds would be questioned. A modest local client depositing $80,000 would face standard due diligence. A client wiring $80 million from a shell company registered in a jurisdiction with no public ownership records would be assigned what internal risk scoring literally labeled in a leaked 1997 policy memo as Tier 1, Priority Discretion. The document explained the reasoning and language that reads, in hindsight, as almost breathtakingly cynical. Clients of this scale possess the resources to manage their own legal exposure. Our obligation is stewardship, not investigation. In practice, this meant that the clients Hallowmere was least willing to question were precisely the clients most likely to be moving the proceeds of corruption, organized crime, and sanctions evasion. And within a decade, that is exactly who made up the overwhelming majority of the bank's largest accounts. By 2003, Hallowmere managed assets for clients connected to at least 4 ongoing corruption investigations across 3 continents, according to records later compiled by international financial crime investigators. None of Hallowmere's own compliance officers flagged these relationships internally during this period, not because the connections were invisible, but because the bank's onboarding software, custom-built by an outside contractor at Vantry's direction, was specifically configured to deprioritize adverse media screening for accounts above a certain asset threshold. A former systems engineer who worked on that software, testifying years later under a pseudonym, described it plainly. The system wasn't broken. It worked exactly as specified. It was built to not find things. The bank's growth over the following decade was extraordinary and extraordinarily quiet. Hallowmere never sought public attention, never appeared in wealth management rankings, never courted press coverage of any kind. This, too, was strategic. By 2010, the bank held an estimated $9 billion in client assets, structured across a network of over 600 shell entities registered in at least 11 jurisdictions, each one adding a further layer of separation between the ultimate owner of the money and the money itself. Among the clients whose funds moved through this structure during the 2000s and 2010s, a state health minister later convicted, in absentia, of embezzling healthcare funds meant for exactly the hospital system described at the start of this case. A commodities trader sanctioned by 2 separate governments for facilitating weapons sales to an active conflict zone. And a construction magnate whose companies were later found, in an unrelated investigation, to have used forced labor on infrastructure projects funded partly through Capital Hallowmere, had helped structure and disguise. Hallowmere did not create these crimes. It is important to be precise about that, because the defense in this case will rest almost entirely on that distinction. But what the bank did do, according to internal documents that would later become public, was provide something these clients could not have easily obtained elsewhere: a financial system sophisticated enough and secretive enough to make the money simply disappear from view, re-emerging elsewhere as clean, respectable capital. The mechanism was elegant in its simplicity. A client's funds would enter Hallowmere as a deposit into a shell company account. The shell company typically registered in a jurisdiction with strict corporate secrecy laws and no requirement to disclose beneficial ownership. From there, the funds would be distributed across a lattice of interconnected holding companies, each transaction individually unremarkable, each layer adding distance from the original source. Eventually, the money would resurface as a loan, an investment, or a purchase, clean on paper, functionally untraceable in practice. Internal training materials referred to this simply as the wash cycle, a phrase that a former compliance director would later testify was used openly, without euphemism, in internal meetings. For over 2 decades, this system operated with almost no external scrutiny. Swiss banking secrecy laws, still robust through much of this period despite international pressure, provided a legal shield. Hallowmere's small size and deliberate lack of public profile meant it rarely appeared on the radar of financial journalists focused on larger, more visible institutions. The bank was, in the truest sense, hiding in plain sight, legitimate enough in appearance to never draw suspicion, small enough to never draw attention. What eventually exposed Hallowmere was not a government investigation and not a single dramatic leak. It was the patient work of an international journalism collective, the Meridian Consortium, made up of reporters from 14 countries who had spent years investigating offshore financial secrecy following earlier, larger leaks involving other institutions. In 2018, a source within Hallowmere's own compliance department, a mid-level officer named Renaud Aubert, who had spent 3 years growing increasingly uneasy about the accounts he was processing, began quietly copying internal client structuring documents onto an encrypted drive. Aubert has since described, in the only interview he has given, the moment that pushed him to act. He had been asked to process a routine transfer for a shell entity tied to the health minister, whose case opens this file. Aubert recognized the minister's name from unrelated news coverage of a hospital funding crisis in his home country. He raised the connection informally with a supervisor, He was told, according to his account, that our job is banking, not journalism, and that the matter was not his concern. Over the following 18 months, Aubert compiled what would eventually become known as the Hallowmere Files, over 400,000 internal documents detailing the ownership structures, shell company networks, and internal risk scoring policies behind the bank's largest and most sensitive accounts. He transmitted the files to the Meridian Consortium in late 2018 at considerable personal risk. Aubert was subject to a criminal complaint filed by Hallomere's Swiss counsel within weeks of the files becoming public, a complaint that was later dropped following international pressure and widespread characterization of Aubert as a public interest whistleblower. The Meridian Consortium's reporting, published simultaneously across dozens of news outlets in April 2019, did not merely allege wrongdoing in the abstract. It named specific account holders, traced specific fund flows, and, critically, Bepo published the internal inverse scrutiny model memo in full, along with internal messages in which compliance staff explicitly discussed avoiding due diligence on politically exposed clients whose business the bank did not wish to lose. Hallomere's public response, delivered through Swiss legal counsel, was a statement asserting that the bank operates in full compliance with all applicable Swiss and international banking regulations, and that individual client relationships are confidential and cannot be discussed. Julian Vantry, by then 76 years old and retired from active management for nearly a decade, did not respond publicly for over 4 months. What followed was an unusually complex, multi-jurisdictional investigation involving Swiss financial regulators, a joint parliamentary inquiry convened by the European Parliament's Financial Crimes Committee, and separate criminal referrals in 3 countries whose nationals appeared prominently in the leaked files. Because Hallowmere itself was headquartered in Switzerland, much of the most consequential testimony took place before the European inquiry rather than in a single national court, including remote testimony from Renaud Aubert, and, after considerable legal pressure, a deposition from Julian Vantry himself. During that deposition, Vantry was presented directly with the 1997 inverse scrutiny model memo, bearing his own signature of approval. Asked whether he had understood at the time that this policy would make the bank more attractive specifically to clients seeking to launder the proceeds of corruption, Vantry's response became the defining quote of the entire scandal. "I understood that we were building a bank for clients who valued privacy above all else. What clients chose to be private about was, in my view, their own affair, not mine to police." The inquiry's final report, published in 2021, concluded that Hallomere's compliance architecture had been not merely inadequate, but affirmatively designed to minimize the bank's exposure to information it did not wish to possess. Swiss regulators ultimately revoked Hallomere's banking license in 2022. The bank's assets were placed into orderly wind-down, with a portion of recovered funds, estimated at just over $300 million, a fraction of the total believed to have passed through the bank over 3 decades, directed toward restitution funds for the countries whose public finances had been most directly affected, including, symbolically, a dedicated allocation toward rebuilding the hospital system, described at the opening of this case. Julian Vantry was never criminally charged. Swiss prosecutors determined that the specific statutes under which his conduct might have been prosecuted had, for the earliest and most consequential years of the bank's operation, already expired under statute of limitations by the time the files became public. He remains, as of this recording, a private citizen living in Switzerland. Here is my verdict. Hallowmere Private Bank is guilty, not of a single dramatic crime, but of something in some ways more disturbing: the deliberate construction of an entire institution whose core function, dressed in the respectable language of private banking, was to make wrongdoing invisible. This was not negligence that accumulated over time. The 1997 memo makes that plain. The bank's founder understood, in writing, exactly what kind of clientele his inverse scrutiny model would attract, and built the system anyway, because that clientele was profitable. The defense, and Vantry himself, would argue something that deserves to be taken seriously: that Hallowmere never directly committed the underlying crimes. The embezzlement, the sanctions evasion, the forced labor, and that a bank cannot reasonably be expected to independently investigate the internal governance of every sovereign nation whose officials become clients. Banking secrecy, until recently, was not merely tolerated, but actively protected by Swiss law, and Hallowmere was far from alone in operating within that legal framework, holding one institution uniquely responsible for exploiting a system that an entire industry relied upon, may, in a narrow sense, be selective enforcement. But the inverse scrutiny memo closes that gap, just as it did for the congressional investigators. This wasn't a bank that failed to notice suspicious money. It was a bank that built its onboarding architecture specifically to avoid noticing it, and did so in writing, at the direction of its founder. When an institution designs its own ignorance as a business strategy, the resulting silence is not an accident. It is the product being sold. Now, some of you will argue that Vantry is right, that a bank cannot be its client's conscience, and that the real failure here belongs to the corrupt officials and criminal networks who used Hallowmere as a tool, not to the tool itself. There is real weight to that argument. Make it in the comments. I will read every single one. Hallowmere Private Bank is fictional. The pattern is not. Case closed.